Hello, everybody. This is Arturo from FXMC, and today we will be talking about how to follow FXMC trade signals correctly, and how to do a proper risk management, and how to follow a proper proper lot sizing when placing a trade. Well, first of all, we need to comprehend that when trading forex, we're in a CFD market. It means contracts for difference. What it means is that you can either make orders on sell or on buy. When we're placing a sell, we're looking for a downturn on the first price, and when we're looking for a buy, we're looking for an upturn in the first price. Well, that's the first thing. We have different types of orders. We have buy stops and buy limits. When we place a buy stop, we are putting a buy order on a higher entry price than the current market value of a given pair. And when we're making a buy limit, is the opposite. When we're doing a sell stop, we're placing a sell order on a higher entry price than the current market value of a given pair. And when we're making a sell limit, we're doing the opposite. So I think that this is very easy to comprehend, and these are just general guidelines to give you a context about how to trade buys and how to trade sells. Okay, next slide. We will be talking about how to place properly a trade signal. Well, we will always give you an entry minimum and an entry maximum. Why? Because when we give entry minimums, are entries in which you can, well, you can have an easier price, you can have a safe price. And we're giving maximum entries because we're trying to make perfect entries. However, you need to place both orders for you to get profits, because we are not sure if the entry max will enter. We are only sure that the entry min will enter. But you still need to place both orders for you to maximize profits. Then, if we are on losses, you must not move your stop loss unless we say so. Why? Because we are calculating our stop loss 30 pips down or high. So we're giving a margin of error of 30 pips on each trade. So if you move your stop loss, you can have bigger losses, or what basically can happen is that a trade that you place will be going on losses and will be closed on losses if you move it. Sometimes we need to face that we're going to lose sometimes at the forex market. So just let the trades run, and if it hits a stop loss, well, it hit it. And on next trades, we will be winning, because we are always looking for bigger ratios for profits than a loss ratio. So we are always trading 2-to-1, 3-to-1, 4-to-1, 5-to-1, all up to 10-to-1. And what we're looking with this is if we lose in one pair or in one order, we win in 2 or 3, and we will be in profits. Second, just place the entry minimum and the entry maximum. And you're always going to place the take profit one order. Yeah. When the pair is close of hitting take profit one, you can either close in take profit one, or move your take profit to take profit two, and subsequently be moving your take profits. We have a phrase here at FXMC, which is better assure a dollar than be thinking about $1,000 in the sky. So what I recommend is that if you are waiting for a bigger take profit, what you should do is place your stop loss on profits or on break even. Yes, because we don't want to see people losing money for them following our trades correctly, or by missing a take profit. Second of all, we hate watching people lose money. So when we are 30 pips positive on a trade, we will always recommend to place your stop loss on break even. I mean, this is only optional because there's people who don't want to do it, but it's a recommendation for us. Yeah. Another thing that you can do when we are 30 pips up is you can close partially and assure some profits. Yeah. And that's how you can go. We always recommend to place your stop loss on break even when we are 30 pips up, because we don't like seeing people losing money. Next, we are a company which likes to take advantage of swings, because Well, last week we did that with US dollar, Canadian dollar, and that gave us huge profits. And well, what we basically do is that we give a macro alert that should not be closed, and we are playing with the swing, going sell, going buy, going sell, going buy, and we're giving 30, 50 pips of profit in our swings, and we're giving 200 to 300 pips of profit in our macro. So when we do this, just be sure to place your macro entry and place your swing entry. That's what we'll be doing. Next of all, what is the most important thing on trading? Risk management. Absolutely. First of all, if your account is small, avoid trading with oil, exotic pairs, and indices. Why? Because these are very volatile things, and this can give you latches that can literally destroy your account. So avoid trading with oil, exotic pairs, and indices if your account is small. Second of all, we recommend you to use a proper lot sizing. At the next slide, I will show you my chart, which is the one that we recommend for users. These are only recommendations for trading, and if you wish, you can use this. Second of all, never risk more than 10% of your total equity on a single trade. We recommend you to risk from 2 to 5% of your account equity on a single trade. Why? Because what's the main reason? Because traders fail. Because they can win 5 operations, but if they do a poor risk management, they will eventually lose all their money on a trade. That's why we recommend only to use 10% of your equity as a maximum on a single trade. However, the ideal thing is to risk from 2% to 5% of your account on a single trade. Next, if you're late for a trade, you can place that trade if it's a profit. You can place the trade if it's on profit if you have a bigger profit ratio than a bigger loss ratio. If it doesn't, if you're very late and you can only earn a profit 50 pips and lose 60, then don't do this. If the profit ratio is bigger, you can enter to a trade without any problem. But if it isn't, then don't enter to a trade. Second, don't over leverage yourself. What I mean by over leveraging? By putting many operations, placing many operations, and going crazy with it, making a bad lot sizing that will eventually break your account. Why? Because you might get lucky one day and duplicate your account, or you might get lucky 2 days or 3 days, but eventually your account will go into bankruptcy. Second of all, don't expect yourself to duplicate your money of your account in a single day. Making from 3 to 20% of your account per day is something excellent. If you can make 10% of your account daily, that's something great. But if you don't make that amount, if you don't make that percentage, by making 3%, it's something fabulous, you know? The most important thing is that when you deposit funds to your Forex account, those funds are funds that you're willing to lose. Why? Because the Forex market is very volatile. So if you deposit your whole assets, your net worth, or something that matters you very much, a very big quantity for you, if the Forex market goes wrong and you lose your money, you will be preoccupied on what will happen. But if you're a trader which only deposit funds that he's willing to lose, you're not going to have any problems with this. Next slide here is what I recommend of using. This is the account size, the lots that we recommend you to use on the entry minimum, and the lots that we recommend you to use on the entry maximum. So if your account is from $100 to $199, you should place 1.01 lots on the entry minimum and 1.02 on the entry maximum. Going to 200 to 400, you can place your trades on the entry minimum with 0.02 to 0.04 in the entry maximum. As it goes, you can look at here at the chart. And what is most important is that if your account is bigger than $1,000, you can place 1.06 lots or more on the entry minimum, and 0.12 on your entry maximum or more, obviously. However, what I recommend you guys is that if your account is small and well you're starting to trade, the follow or risk management guidelines. This is what we recommend, but sometimes our stop loss are a little bit big, so just be careful with that and try to make a proper risk management. We will be giving the shots, you will be calling how much lots are you putting, you will do the risk management. Next, if you have a micro account, which is not very common, but if you do so, try to do this. Well, comprehend that one standard lot will be 1.01, sorry, that one micro lot will be 0.01 standard lots. So just comprehend this to perfection and you will be ready to trade. And well, this is everything for today. This is Arturo from FXMC, and see you next time.